Hello everyone and welcome to Moementum channel. In this video, we're going to be talking about three high quality, high growth stocks that have been increasing their dividend for over 50 years. All right, our very first pick is a company called Parker-Hannifin. It's an industrial sector business with ticker symbol PH. It has a dividend yield of 2.14%, which is considered to be very safe dividend. What's also really unique about this business is, and aside from the fact that they've been paying their dividend for many years, which we will get to in a moment, is the fact that last they increased their dividend in April of 2022, whereby they increased it by 29%, suggesting a very fast dividend growth. On top of that, from a volatility perspective, Parker-Hannifin has a beta score of 1.06. A beta is a measure of volatility, and a beta of 1 suggests volatility similar to that of the overall stock market. In this case, given that the beta for Parker-Hannifin is slightly over 1, suggests some slight over volatility than the overall stock market. From a market cap perspective, Parker-Hannifin has a market capitalization of $31.8 billion, making it a large cap business. Parker-Hannifin manufactures, sells motion and control technologies and systems for various mobile, industrial, and aerospace markets worldwide, and the company operates through two segments: diversified industrials and aerospace systems. This business was founded in 1917 and is headquartered in Cleveland, Ohio. Looking at the key metrics for its dividend payments, it has a very low payout ratio of only 23%, suggesting very low for most companies. And if we look at it, their forward payout ratio still is very low, giving them a ton of room for increasing their dividend payments for years to come. And on top of that, if you look at their dividend growth over the years, the story gets even more exciting. In the last 20 years, they've been increasing their dividend on average by 11%, suggesting fast dividend growth. In the past 5 years, they've increased it by the average of annualized 8%. And as we talked about earlier, last year, they increased it by 29%, the last time that they increased it. Get this. Parker-Hannifin has been paying its dividend for the past 65 years, and in all of those years, they've increased it year after year. They're definitely a top-notch Dividend King from that perspective. They currently pay an annual dividend amount of $5.32. Their dividends are paid quarterly, and it's paid in the months of March, June, September, and December. Looking at their stocks and in terms of the valuation perspective, the stock currently is hovering closer to its 52-week low price. Not surprising, given that most of the businesses have been hit hard during the past several months, at least during the 2022, and this is also reflected in terms of the performance of this stock. However, judging by how their dividend yield currently is showing 28% above their own 5-year average around 1.68, it could suggest a wonderful opportunity for adding this stock to your portfolio at this time, taking advantage of this high dividend yield and locking it down. On top of that, if you look at their price to earnings ratio, for the forward price to earnings ratio for Parker-Hannifin, it is at 13.1, which is below their own 5-year average. Again, another marker why we think this could be a good time for investors to consider Parker-Hannifin and add them to their portfolio, or at least add them to their watch list, depending on their risk tolerance and investment decisions. In terms of their earnings per share, ideally, we'd like to see a company that continues to increase its earnings over the time, gradually and consistently. Despite some declines in 2013 and 2016 and 2020, overall, you're seeing that nice gradual increase. And in the next 12 months, they're estimated to have $19 in earnings per share. So that's positive to see. On top of that, in terms of the total sales, we are seeing that gradual increase. There was a little bit of that valley kind of style. You had a little bit of the declines around 2016 and 17, but since then the business is recovering. In fact, in the last 12 months, they're showing their highest amount of sales in the past 10 years with $15.6 billion. On top of that, they are showing signs of buying back their stocks. We are seeing the nice decline in the number of outstanding shares in the last 12 months at 131 million shares outstanding. Compared to 10 years ago, it shows a buyback of close to 24 million shares. And lastly, if you look at their operating margin, which we would like to see 12% or more for most companies here, they're showing that they've met that threshold for the most part, at least in the past 5 years, and the last 12 months, they're at 18%. Our next pick is a famous business, Lowe's. It's a consumer discretionary business that is active in home improvement retail kind of industry with a last trading price of $180.11. It has a beta of 0.82, suggesting less volatility and an average volatility overall in comparison to the overall stock market. They last increased their dividend by 31% in May of 2022. That's a very fast dividend growth, and they do have a very safe dividend. Lowe's currently has a dividend yield of 2.33% and a market cap of $116 billion. Lowe's, it's a reputable business known by many investors. It operates as a home improvement retailer in the US and internationally, and offers a line of product for construction, maintenance, repair, remodeling, and decorating. It was founded back in 1921 and is based in Mooresville, North Carolina. Looking at their key metrics for dividend, they do also have a very low dividend payout, currently at 26%, and the forward payout ratio of only 30%, suggesting a lot of room for increasing their dividend for years to come. They have also been paying their dividend for the past 59 years, and in all of those years, they've increased it year after year, definitely making them a high-quality Dividend King stock. On top of that, if you look at their past dividend growth, in the past 5 years and 20 years, they have been increasing their dividend very fast with an annualized of 18% and 24% respectively. They currently do pay $4.20 per share in annual dividend payments. Their payments are paid quarterly in the months of February, May, August, and November. In terms of the timeliness for this stock, you'd notice similar story how their latest price is hovering closer to their 52-week low price. Their forward price to earnings ratio of 13 is definitely way less than their 5-year average of 17.9, suggesting the stock is being traded at lower valuations. And in terms of their dividend yield, it is 30% above their own 5-year average. Again, suggesting that this could be a perfect time if you would like to get hold of this high-quality Dividend King stock. As for their earnings, you're seeing that nice gradual increase year after year, just a perfect, picture perfect kind of performance there, with the next 12 months estimated to have $13.80 in earnings per share. In terms of their total sales, you're still seeing that picture perfect almost increase. In the last 12 months, they're showing a little bit of decline, but still at $95.5 billion in total sales, quite a decent increase in bump compared to many years prior to that. As for outstanding shares, they're also buying back their shares. Currently, only 685 million outstanding shares, almost half of that what they had about 10 years ago. And lastly, in terms of their operating margin, they're trading over that 12% threshold, ideal threshold in the past 3 years, and that makes it quite a remarkable metric for us to look at. And lastly, our third and final pick is Hormel Foods, another reputable business in consumer staples with a very low stock volatility at beta of only 0.13 and a market cap of $26 billion. It was last traded for the price of $47.80 and has a dividend yield of 2.18%, which is considered to be very safe. They last increased their dividend back in November of 2021 with 6.1%. Hormel Foods, for those who may not be familiar, develops, processes, and distributes various meat, nuts, and food products to retail, food services, deli, and commercial customers in US and internationally. The business was founded, in fact, in 1891 and is headquartered in Austin, Minnesota. As for their dividend key metrics, they have a payout ratio of 55 and a forward payout ratio of 53%, both of them suggesting low dividend payouts, giving them a ton of room to continue to increase their dividends. They have been increasing their dividend on average 13% per year in the past 20 years, and in the past 5 years, they've increased it 11% annually, suggesting a fast dividend growth. They have been paying their dividend for the past 56 years, and Hormel Food has been increasing it in all of those years, each and after year. In terms of their annual payout, currently they have an annual payout of $1.04. They do pay their dividend quarterly in the months of February, May, August, and November. Now, looking at the timeliness, Hormel Food stock currently is hovering a little bit closer to that 52-week high or low price is almost halfway in between, in a sense. As for the forward price to earnings ratio, it's at 24.5, which is slightly higher than their 5-year average, which is why it shows to be somewhat of a reasonably valued at this time. As for the dividend yield, it is slightly over their 5-year average, but about 6%, at currently being at 2.18%. Lastly, let us take a look at a number of additional metrics. We're going to take a look at earnings per share. You are showing here how the next 12 months, they're estimated to have $1.95 earnings per share, which would be the highest in the past 10 years. As for their total sales, they are also showing that increase in the last 12 months, estimated to have been at $12.5 billion. Definitely the highest amount in the past 10 years that they've had on record. As for the outstanding shares, they're slightly now showing an increase. In fact, this is the highest amount of outstanding shares that they've had in the past 10 years at 548 million outstanding shares. That said, it is not a drastic increase, and that's not a big red flag for us there. Lastly, in terms of the operating margin for consumer staples, ideally we'd like to see above 16%. We are seeing that Hormel Foods has not hit that threshold in any of those past 10 years. Nonetheless, for the investors who are looking into Hormel Foods, they're mostly interested in a high quality dividend paying stock that has been increasing its dividend for many years. And in fact, they are considered to be another high quality Dividend King stock. Well, there you have it, folks. A quick look into 3 high quality Dividend King stocks that are considered to be high growth stocks as well. Perfect opportunity for those who are looking for a balance of dividend and growth. If you enjoyed this video, don't forget to smash that like button and subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks, as well as investing in crypto. We also talk about ways to reach financial freedom. Thank you, and I hope to see you next time.